Man, oh man, the EU is totally losing it right now and wants to ban anonymous crypto accounts as well as privacy coins. This is all supposed to happen as soon as 2027. And this isn't even up for debate anymore. It's a done deal, and it could be the setup for a massive wave of expropriation that's just around the corner. You can see it here too. EU to ban anonymous crypto accounts and privacy coins by 2027. Let's take a look at what's really going on here, because honestly, your privacy is seriously at risk now. We're heading straight toward digital surveillance and control. Bitcoin and self-custody are still allowed, but the big danger is that anything related to privacy could be criminalized, including coin joins and other privacy tools. And the absolute kicker is that the EU is keeping the final say for itself. That means they get to decide what counts as a privacy coin. Today, it's Monero and Scash. Tomorrow, it could be Bitcoin. Just a few days ago, I made a video about how the EU was pushing to delete parts of the blockchain because some personal data isn't GDPR compliant. And now comes the next shocker. They're going all out against privacy coins, and of course, anonymous crypto accounts. Let's take a look at how you can protect yourself and what this means for you. But first, leave me a like down below, because these are really important topics we're discussing here. If you don't want Bitcoin, crypto, and so on to be banned, then smash that like button below. These videos need to be shared. We have to get these videos out to the masses so people actually realize what's going on. Because if no one speaks up, if people just go along with it, they're just going to dictate everything here. And the crazy thing is, this whole thing has basically already been decided. Apparently, there are just a few details left to sort out, but those are just minor things. The effective date for the ban on anonymous crypto accounts is set for July 1st, 2027. We'll take a look in a moment at what that actually means. I'll also link the full article for you down below. I summarized the article here for you. There are about 5 main points that are really important to understand right now. The first scandal here is basically the ban on privacy coins. This doesn't include Bitcoin. This is now Zcash. This is now Monero. But as I already mentioned, today Bitcoin is not a privacy coin. Tomorrow, it could already be considered one, because the EU reserves the right to interpret this however it wants. That means we have an EU AML handbook that's been released here, an anti-money laundering handbook. And it says here, quote, credit institutions, financial institutions, and crypto asset service providers are prohibited from maintaining anonymous accounts. So Monero and Scash are supposed to be completely banned. And now this also becomes important for Bitcoin. Anonymizing Bitcoin technologies like CoinJoin or Wasabi could come under fire. That means this isn't happening directly right now, but it could happen that certain anonymization tools like mixers and so on will continue to be targeted. And the problem is that privacy is actually a human right here, but now privacy itself is being criminalized. That means you no longer have a default right to privacy here. Instead, it's very heavily restricted. I mean, no one can stop you from sending Bitcoin peer-to-peer back and forth here, or from sending Monero back and forth. But if it's no longer allowed for service providers, if it's no longer allowed on the platforms, then you're already running into difficulties. It's getting harder to get into Monero and other things. If it keeps getting harder to use the on and off ramps, then of course handling and adoption here will be massively slowed down. They think they can't really ban Bitcoin here anyway. It's just like with the GDPR, what they wanted to do there, somehow delete blockchain entries. That's simply not possible. You can't suddenly change something that's irreversible, that can't be altered. And in the same way, you can't just ban a language, mathematics, or cryptography, which is really a universal protocol, by decree from the EU, even if it's written into law. The next thing, which directly affects Bitcoin, is a complete ban on anonymous crypto accounts. That includes Bitcoin as well. All anonymous crypto accounts are prohibited, even if they are self-custodied. And I just mentioned that there's nothing you can really do if someone sends Bitcoin back and forth peer-to-peer. I'm actually not 100% sure what exactly is meant by prohibiting anonymous crypto accounts that are self-custodied. I'm not sure if they're referring to hardware wallets here, like a TREZOR hardware wallet, or if they mean crypto accounts on an exchange or something like that. The rules apply to bank accounts. Now it gets to the point where this doesn't just apply to Bitcoin, to bank accounts, to crypto accounts, or to safe deposit boxes. There were a lot of people who still used some kind of safes, some kind of vaults or something like that, where, for example, they would put a seed phrase inside. Passbooks, basically anything that stores value and is anonymized, is supposed to be banned or made illegal here. I also don't know yet what the penalties for that would be. I don't think there are any clear guidelines yet, whether you would go straight to jail, whether it would be censored, whether you would have to pay fines or penalties. No idea what exactly will happen there. If you already have more detailed information about this, let me know in the comments below. As the quote says, in the interpretation, crypto asset accounts, allowing anonymization of transactions will be prohibited. So, all crypto accounts that allow or enable any kind of anonymization here. So I'm just going to assume that maybe if something is within the regular KYC cycle, it might still be somewhat allowed. but things like decentralized exchanges and other services that aren't fully or 100% KYC will definitely be shut down. And the problem is that this also attacks the pseudonymity of Bitcoin, which is actually a core idea of Bitcoin that's being destroyed here. If you use Bitcoin smartly, its pseudonymity allows you to use it in a somewhat anonymous way with coin joins, mixers, and so on, which is also legitimate. But if you break that pseudonymity, then the core idea of Bitcoin is also under attack, because you're turning something pseudonymous into something completely public, visible, surveillable, and controllable. And of course, the goal here is also to gain access to potential assets, which, in combination with an asset register, which doesn't exist yet, but has been studied here in the EU, or with other expropriation measures like a potential property levy or property adjustment, could theoretically also be applied to crypto coins. So there are now a whole lot of possible avenues open here that, I'd say, don't necessarily have to be taken, but at least they could be. Then here we have scandal number 3. Starting in 2027, the EU will directly oversee 40 major providers based on transaction-based thresholds for goods. That means companies with over 20,000 customers in the country. So, for example, if an exchange in Germany has more than 20,000 customers or more than 50 million in transaction volume. The quote here refers to materiality thresholds, meaning if these are exceeded, if they get too big, the materiality thresholds become a weapon against anyone who grows too large, and that's a major problem. Of course, this also leads to large exchanges being broken up, and it basically creates a constant incentive not to become too big. That's already the case to some extent with unions and so on. We had the same thing at my hotel, for example, where they tried to stay below the threshold of, I think it was 10 or 12 employees, because then the employee protection laws aren't as strict and it's easier to fire employees and so on. And the bigger you get, then employee protection measures come into play, then at some point union stuff gets involved, and it just keeps getting more complicated, more bureaucratic, and that's how you end up creating these bureaucratic monsters. On the other hand, you could also break up certain platforms here, though whether that's good or bad is another question. I mean, that's something you have to decide for yourselves. I think anything that involves regulation, restriction, or less freedom is always potentially problematic. And the question is always, how will it actually be interpreted? That means you always leave some room for interpretation here, so you have a set of rules, but exactly how they're applied in the end is always a matter of definition. By the way, the whole article was published about 5 days ago or so it's not brand new, but at 5 days old, I'd say it's still pretty recent. Honestly, I didn't really have it on my radar. Yeah, I had seen it before, but I just had to make a video about it now. Now we have scandal number 5, AML, or anti-money laundering regulation. It's confirmed, but the details will be released or officially announced later. That means it's already certain that the AML regulation will go through, but the details haven't been finalized yet. Here, the legal text also says again, the regulations are final. What remains is the fine print. That's what Yara Sabova from the UCI says here. In plain German, that means nothing other than the law has been passed, but the actual interpretation will now be formulated by unelected bureaucrats. Keyword delegated acts, without any democratic oversight. And this thing with the delegated acts, I hadn't really been aware of it, but it's honestly just outrageous. I quickly looked this up to explain it to you here. Now brace yourselves. Delegated acts are special legal instruments of the European Union that allow the EU Commission to issue supplementary or more detailed rules to already adopted laws, without the Parliament or the Council having to approve every single detail. That means we have a law, and now with these delegated acts, we can basically rephrase or interpret the law however it suits us at the moment. Sometimes we can interpret it one way, and other times we can interpret it another way. In simple terms, this means that the EU Parliament and the Council pass a basic law, here, for example, the AMLR, which is the anti-money laundering regulation, and then they delegate the implementation, specifically the technical or professional details, to the EU Commission. The Commission then issues what are called delegated acts, which are sub-laws that specify how the main law is to be implemented in practice. And the crazy thing is, the big hurdle, the big danger, is exactly what it says here. Here, the dangerous weapon isn't the law itself, but rather the arbitrary interpretation by authorities like the I read that wrong, the European Banking Authority. So, there are again these sub-parties, these lower-level authorities. And that means we basically already have a surveillance and control law here, which can then be interpreted however they want at any time. That means they just create this basic framing, this basic framework, where they basically make everything generally illegal, and then later on they can just say, okay, depending on what suits us at the moment, we'll ban this here, restrict it there, and maybe do something else over here. And if things get really serious, they can probably just change the definition during a legal dispute and say, well, now you're officially convicted or something along those lines. Of course, I'm exaggerating a bit here, obviously, but that's just the kind of arbitrariness you need to be aware of, and that shouldn't be ignored. But it doesn't stop here. Here comes scandal number 5. Every transaction over 1,000 euros turns into a data collection operation. That means due diligence requirements kick in starting at just 1,000 euros. KYC for every larger transaction, even between friends or for self-custody transfers. The big question is whether this also applies to self-custody transfers. But as I said, they just create a framework, and then in 2028, 2029, or whenever, they could simply tighten it even further. The law simply states, mandatory customer due diligence on transactions above 1,000 euro. So, just a quick assessment. It's no longer your money, it's their data source. Anyone moving 1,000 euros automatically gets caught up in the gears of surveillance. So, you're basically being pushed into the criminal sphere here. So, just a quick overview again. Oh, now they're going wild back there and throwing a party. I need to get out of here now. It's Sunday here today, and there are people at the beach partying. So, just to quickly summarize again, the big problem is that the EU decides what counts as a privacy coin. Today it's Monero, tomorrow maybe even Bitcoin, who knows. This creates huge legal uncertainty for developers, users, and wallet providers. So in the future, if I had a startup here, I definitely wouldn't set it up in the EU. But what's also important to take away is, Bitcoin itself isn't banned, but anything that creates privacy is being criminalized. And who knows, maybe tomorrow Bitcoin will be considered a privacy coin or something like that. And of course, hardware wallets are still legal here, but the question is whether they'll still be legal in the EU, or if you'll want to leave the EU if you're doing self-custody. And of course, if you use coin joins, mixers, or things like that, Wasabi or whatever else is out there, you also have to expect to face reprisals or at least be prepared for them. And the big question is, what should you do now as quickly as possible? Withdraw all your coins from exchanges, from any financial platforms, and so on. I'll link a TREZOR hardware wallet for you below. It's really important now to take action. I mean, you still have a bit of time until 2027. You don't need to rush or panic right now. You can use the code BITCO in hotel. There's still a discount on a TREZOR hardware wallet with that. Of course, you should fill your bags before the KYC restrictions really clamp down. Right now, you can still buy Bitcoin pretty easily on 20anebitcoin. Just use the code BITCO in hotel and save up to 20% on fees. It's also important to remember, you can't just blame the platforms for this, saying, okay, these damn platforms are doing so much KYC and all that. They also just have to follow the regulations. So, if you want to do something, you could also consider just chilling on the beach here in El Salvador. Of course, you don't have to deal with that kind of nonsense here. Just yesterday, I saw another attack from the EU where they went after El Salvador. Supposedly, there are human rights violations and so on. But by now, El Salvador is actually safer than most places in the EU, which is just totally crazy. Here, Bitcoin isn't restricted. Here, they don't go after your privacy. Here, they don't crack down on anonymous use of Bitcoin. Here, they don't go after wallets. And the people who are basically committing crimes against privacy here are somehow lecturing El Salvador, a country with a president who has over 90% approval from the people, about what counts as a human rights violation and what doesn't. They should really clean up their own backyard first. So, the arrogance here is getting out of hand. And yeah, like I said, you don't need to panic right now. This isn't meant to be a panic video either. There's still time, but just think about it over the next year or two. What's your plan? What will you do in a worst-case scenario? You've also seen that there's a lot of room for interpretation here. Could also be that at first things won't be that extreme. And if they then realize, okay, now everything's blowing up in our faces, we have to censor and expropriate everything from people. People are moving their capital out of the country. Because this is also a preparation for capital flight that's happening here. So that when the EU crashes, there will be a massive capital flight, and of course that will happen through Bitcoin and crypto. And so they want to legally protect themselves in advance to make sure that doesn't happen here. And then on the other side, you get surveillance tools like digital euros, CBDCs, and who knows what else, digital IDs, asset registers, and maybe even a wealth levy could be introduced. And that's the big danger, which is why this is a major warning to you all, but at the same time, also a strong encouragement for you. There are options, and it also doesn't mean that it's set in stone, so to speak. If the resistance from the public is strong enough, laws can always be reversed, new things can be invented, or whatever else might be needed. We've seen that happen in the past, but there really needs to be a groundswell for that to occur. So share this video. Yeah, leave me a like, subscribe to the channel, and I'll see you next time. See you then, peace out. Oh, and by the way, I really didn't make a joke today because this was a serious video. There's nothing to laugh about today. Peace out.